mean, we look at the end of the year, you have $1 million surplus. So then I kind of create these what if scenarios of this is what it looks like if you.
Yo, this is Christian D. Evans with Journey with Christian D. Evans podcast. Guys, thank you so much for tuning in and listening to our amazing podcast. This is where we reveal the top 1% of business concepts and systems and processes to scale 8 and 9 figure businesses. We interview top level 8 and 9 figure CEOs, business owners, and amazing TEDx speakers like David Meltzer. We got Nick Cavuto, Pascal Bachman, and so many others. And if you feel like this resonates with you, please share this with your friend, your family, and make sure you impact them as well, because we're trying to spread the message on those that do not know how to scale 8, 9 figure businesses and talking higher level business concepts. So guys, remember, enjoy the episode and be uncommon if you can. Cheers. Thank you so much for tuning into Journey with Christian D. Evans podcast. I'm your host, Christian D. Evans. We have a fractional CFO. She is the CEO and founder of SJP Services Group. Now, in 2020, after leaving the corporate world in search of more flexibility and a way to make a bigger impact, she now lives in Nashville with her husband and 2 daughters, and she's become an extraordinary CFO fractional for your company. Now, what the heck is that? Well, instead of hiring a $300,000, $400,000, $500,000 employee that drags your operations down, drags your expenses down, she's able to obviously do more output for the input that she puts in. Now, she also has a degree in accounting. In the last 10 years, experience in accounting, bookkeeping, wealth management, financial planning. She's experienced many sides of the financial services world and developed a passion for getting deeper into the clients' businesses, understand their goals, and helping create a plan to create and reach them. Ladies and gentlemen, please welcome the one and only CEO, Sophie Plappert. How are you doing, Sophie?
I'm doing well today. How are you?
Very good. Hey, I'm very excited about diving into this because, again, what's interesting, I was listening to something earlier today, and it was talking about a recession. And naturally, what's happening right now is, recessions are good in their own due time. But with that being said, naturally, a lot of companies are always looking to, decrease expense during that time, increase revenue, increase margin. And what I found so interesting about, obviously, what you're doing in the industry is that you come alongside and you're able to give them extraordinary amount of value for almost like, a third of the cost. And if you could just share with me kind of what you're seeing, and obviously what you're seeing in the industry and why it's so important for companies and business owners to start really thinking about, instead of having an in-house CFO, having a fractional.
Yeah, absolutely. So I feel like a fractional CFO is sort of a newer term that's kind of been thrown out there in the past few years. And a lot of people, when I tell them I'm a fractional CFO or virtual CFO, they have no idea what that even means. A lot of businesses know, like, yes, I need a CPA or a bookkeeper or an accountant that are all very, backwards focused. They're looking at everything, that's happened in the past, recording everything, making sure you're compliant, but then that kind of stops. And I really am interested in the future. And so this is how you've been doing. Let's forecast out like where you're going to go financially to hit your goals. What are your goals? Let's put together a plan to get there. It's something that every business really needs. They need that executive level accountability, but it's not something that every business can afford to have. And so that's what I do. I come alongside you, like you said, really get in deep with your goals for your business. I create financial targets for you. And then we track that on a monthly basis. I create an action plan every single month, making sure that you're hitting your targets and making sure you're making the right adjustments that you need to make to get where you want to go.
So when you're working with a lot of companies, what have you found are like some of the biggest hurdles that a lot of them face? Is it just cash management? Is it a plethora, or it just depends on the organization or the business? I'd love to kind of get your response being on the front end.
Yeah, cash management's a big one. Also, you'd be surprised how many CEOs don't even know what their books look like or how much money they made or lost in the last year. So paying attention to your numbers is a big one. And I always make sure not everyone understands numbers. And so I try to help them understand and like however it makes sense to them, because I work with a lot of creatives that really don't understand numbers and math. Another one is I feel like business owners feel like they need to wear all the hats. So kind of the opposite of some owners don't pay attention to their numbers. Some owners try to be so involved in everything, and it just creates such a bottleneck in their business and their operations. I'm a big believer in doing what you are best at and then hiring professionals to do the rest. Like, you don't have to be a numbers genius. You don't have to understand everything. You need to know like where you stand, but you don't need to be in the weeds all the time. So that's another big one.
So with that being said, then at what point should these companies and business owners, because majority of our audience are about 1 million, right? And in order to get to 1 million, you can run a pretty streamlined team. But once you really start scaling, you need to start thinking about, okay, hey, my C-suite, what am I going to be adding? Higher level individuals, just like you said, and knowing my numbers at a very, very micro and macro level. So my question is, like, at what point should they start looking at either, well, really, that I think the fractional CFO is like an easy in to that world, and obviously that assistant.
Totally.
So what would you look like?
Like, as far as when they should start looking at that upper
Correct.
level management,
Yeah.
I mean, I would say when you start seeing you're a profit, when you've been in business for 2 to 3 years and you're starting to see all this growth, most of the people I'm talking to are like, we're growing, but we have no idea what to do with, the money we're making. What should we be investing in? What should our next moves be? So I think when you're ready to make some decisions and really start scaling is when you should start looking at those type of roles.
And when you're coming, because I want to loop around about the numbers, the power of the numbers, right? We all understand metrics. And what I find so interesting is majority of business owners or CEOs or founders' time and energy are always on the marketing and sales, right? And just because that's what they always think about, generating sales, generating revenue, and so forth. When you're working with, like as fractional CFO, is it more of just allowing them to take ownership, or is it more of like, hey, I want to, and you get out of the way as a CEO, or is it someone like saying, okay, hey, let me build some sort of blueprint. This is the only thing I want you to focus on, and then giving them kind of a very micro influence in the organization? Or would you say it's more of ownership and saying, hey, allow them to kind of drive the conversations regarding cash management and finances, and maybe even marketing and sales, how much we spend on that marketing and the budget side of things?
I create a very clear blueprint for them. So I break things down in terms of not just like revenue and profit, but I'm looking at the number of sales transactions they're doing, the average transaction value, all the payroll, cost of goods sold, all of that. And then I'm giving them a scorecard every month and an action plan every month. If these are the 2 or 3 things that you should be doing next month to move the needles to get, where you need to go. So I'm very specific on what they need to be working on.
Well, I really like this because and having this conversation, because I think many times when we're running businesses, we have certain vanity metrics. We're measuring things that really aren't important, like you said, moving that needle further. So if we could unpack that a little bit, what have you noticed? And I know, again, it just depends upon the business and the system, but what are certain metrics that are very, very important to understand the health of the business, to understand the growth and the cash flow? What does that look like?
So number of sales transactions and average transaction value is always where I start. Then you look at your cost of goods sold as a percentage of sales. And then from there, your overhead, payroll, marketing, and then I kind of just lump everything else under that, operating expenses. That's on the revenue drivers. And then your cash flow. So have you bought and sold any assets? What's your inventory look like? Have you bought a lot of inventory and not sold a lot of inventory? All the things that are going to be driving your cash flow as well. And then making sure you have I like to see 6 months of cash in the bank usually as well.
So do you leverage a lot of profits first kind of mindset and strategies?
I do. A lot of my clients do. So I've kind of had to start leaning into that theory a little bit more.
So for those that aren't familiar with it, because I've read the book and when I was running my business, and it was very, very impactful. If you could unpack kind of what that is, why that's so important, and just kind of like certain systems that maybe they could already start kind of implementing, because I just thought, a lot of business owners, they just don't read those kind of books, sadly. And they do know it's a priority, but they don't know exactly where to start. So if you could maybe unpack that a little bit for our audience.
Yeah, so profit first is basically paying yourself first. So deciding, what your end profit's going to be, taking that out, and then all of your expenses are going to come after that. So, making sure you're setting aside cash. Cash is king. You don't have cash, you're not going to grow. You're not going to be able to do anything. I focus on cash more than profit, to be honest. But yeah, paying yourself. It's like a lot of financial planners, Dave Ramsey, there's all of these different kind of theories and mindsets of money, setting aside 20% savings, all that sort of thing that you've probably heard. But profit first is paying yourself first, is how I think about it.
Well, what I found so interesting about the book, and obviously we'll pivot back kind of a little bit more fractional here, but
Yeah.
what I found very interesting is they talk about certain buckets. And see,
Hmm.
when you're running a personal life, you have those certain buckets like, family and vacation and obviously groceries, right? But then a lot of times you have those profits first really help you dial this in over here to what's the business buckets, right?
Yep.
And
Hmm.
what I found so interesting is like, how much should I be putting away for taxes? And
Yep.
how much should I be putting it back into like the business, right? And also being okay with taking dividends and having those clean profit margins. Um, I love to kind of just maybe get your feedback or perspective on that as well. I found that very helpful on really dialing in and identifying, oh, these are the foundational things that I need to be in place to build
Yes.
an 8 and 9 figure business.
Yeah, absolutely. I feel like I run into a lot of problems where the business owner is sort of draining the business bank account. Unfortunately, I've worked with some not so great clients where they're kind of using it as their like personal slush fund. So I feel like you started your business to obviously earn a living and support your lifestyle. The first, if I see a client taking out so much money from the business, cash flow is a struggle. We need to look at what your lifestyle is first, and then we need to get back to your business because obviously there's a problem there. Setting aside, 20% savings, 20% for taxes at least, and then looking at what else you need to grow your business from there.
Well, and let's kind of dial this in because that was
Yeah.
very interesting because I do know like a lot of $1-2 million business owners are like, yeah, I'm making money,
Yeah.
and they're just spending money as well, and they don't know exactly where it's all going. I've been there, I've
Right.
done that. I remember I was making the first time when we pushed over 100,000 a month, and I was like, oh my gosh! But then I was like, what happened to all of it, right?
Yeah. You're like,
and
cha-ching.
Yeah, exactly. And I remember like, okay, I see it in the sales sheet. We made 100 G's, but where'd all that money go? Because I don't see it in the
Right.
bank account. And obviously we dialed a few things, implementing certain profits first. But if you could kind of maybe some red alerts that allow people to understand, okay, this is where I'm at business structurally. And it's like, oh, there is a better way to run a business and operationally and systematically in the financial world.
Red alerts. Financially, I see any cost of goods sold under over say 40%. Depending on what your overhead is, that's a huge one. Um, living month to month cash wise, that's the biggest one, or week to week. I have clients where every week we're trying to figure out how we're going to pay their vendors or their subs. Like that's not great. That's huge one. 3 to 6 months of cash in the bank is key. And that's what I preach to my clients is you have to have cash. Cash is more important than profit. I've had so many people say, well, we made, 30% profit, or we had $2 million in profit last year. Why do I not have any cash in the bank? And that is what so many of these conversations, and really what I try to change, is people's cash flow problems. I think that's the biggest issue that I'm seeing.
Well, and this is a very interesting topic.
Yeah.
And the reason why is because obviously we've seen a little bit of recession kind of coming up a little bit,
Hmm.
and there are certain things. There's been talks about it, and I know cash flow is king definitely during those times because obviously
Yeah.
opportunities or whatever. But let me ask you because I think this is the way I thought, and I had to fix this thinking. I say, well, once I get $100,000, then I'll take that chunk of money and then I'll put it in the savings. And the
Sure.
reality, though, is it's that whole concept that when you get the 100,000, that 100,000 is spent, right? So whatever your
Yeah.
3 to 6 months, time like budget is. So
Yeah.
the reason why I'm saying this because that was the way I thought, And then obviously I work with someone that was able to help me structure, hey, let's just start taking maybe 1%, 10%,
Right.
5% from this area and start reallocating it over here. And obviously you're not going to get 3 to 6 months over 2 days, even a
Right.
month.
No.
But obviously it's a long-term strategy. And I think
Hmm.
sometimes maybe people need to have that right perspective and realize that
Yes.
it's that small, like little incremental changes that make a big impact. If you could just kind of help me understand, like, what do you do with those clients when they do have a cash flow and making 2 million, but I have zero cash? What's happening? What are some incremental
Yeah.
changes we could do and implement?
A huge one for some of my clients is the debt that they've taken on. I'm super averse to taking on debt, and I've had clients take on very high interest loans just to pay their bills. So when they want to know why they don't have any cash in the bank, a lot of that is not going to show up on your income statement, your profit and loss statement, because it's a that, like, to get into the weeds of accounting speak, but balance sheet items. So looking at your assets, what have you bought, what have you sold, your debt, how much debt have you taken on, how much debt have you used, how much have you had to repay, and then looking at owner's draws, how much have you pulled out. If you're just taking money out of the business, that's not a business expense, so that's going to drain your account as well. So those are the areas where I would start looking at to see where your problem is. And then in terms of when you're thinking about us going into this recession, something I'm doing with my clients is, let's pull your profit and loss for the last 13 months and where are your expenses, what areas have been ticking upwards every month, and what can we need to dial back, where, what has our spending been looking like. That's a big one as well, to really review over the past few months what your spending is like.
Gotcha. Because what I'm noticing as well is, like, you always want to decrease this now, that expense side, right? And obviously,
Hmm.
keep the margins and whatever. Now, with that being said, and I appreciate the anticipation, like what should you do to anticipate what's happening, what may
Yeah.
happen down the road? Um, with that being said, is it, hey, do we just totally eliminate it, that expense? Like, because I know some software is just always there. Sometimes it's
Yeah.
$100, $100 per whatever. Or is it just more of coming in there creatively and say, hey, do we need this software for every single one of our salespeople? Or maybe we could just eliminate to only 3 licenses and then everybody else has their own or pay for their own, or like just restructuring that, the
Yeah.
creativity.
I think it could be both. I think if you really dive into each of those expenses, I'm sure you have expenses you could just eliminate that you might not even know you're still paying for. And then other things that maybe you could just save some money. You don't need to spend as much money.
Very interesting. Very interesting. What other things should they start doing to anticipate this? I've heard some individuals are starting to pull back from full-time employees, where they've been able to say, okay, you know what? Do we need this one person just to do that one job, or could maybe
Hmm.
the marketing manager do both of those jobs and obviously save expense that way? Is that what you're noticing as well, or consulting for some of your clients, or?
Yeah, I mean, and I think that's something that's smart to do anyway, is to, look at your payroll expense and if you have contractors, what you're paying them, and see, are that, could you consolidate some of these roles and that sort of thing. Um, I haven't, I've had a lot of people start to kind of hit the panic mode on the recession. And what I've been telling them is, like, like, take a deep breath. We don't need to panic yet. One big thing I've been talking about is to look at the seasonality of your business, because we're in June, it was May, June, we're going into summer, and they're already seeing a downturn in sales, and they're starting to freak out. Oh, we're going into a recession and that's why our sales are down. But it could also just be that it's summertime and people aren't buying your goods and services as much. This is a natural downturn for several industries. And so it might not be time to panic just yet. So that's another big one I've been trying to drill into them lately.
Well, speaking of that, what I always found so interesting, and we'll kind of dive back into this here, but I always find it's almost like a self-fulfilling prophecy. It's one of those things like,
Yeah.
oh, recession, it's going to be coming, it's coming. Oh, and then naturally it occurs, and we're wondering why it did, because that's what we just kind of discussed. And now everybody slows down the spending. Everybody's
Right.
like, holding back. They're not investing because they're afraid. And then naturally it occurs because the market's just done that. And I just always found that psychologically, it's very interesting. Um, However, though, I did want to, bring this back up because I found this very interesting. I always find a million, 2 million, when you don't have cash in the bank, what happens is it feels like you're on a treadmill, you're handcuffed to it, and it's going full throttle. And that's one
Hmm.
of the reasons why a lot of business owners just focus on the sales and marketing, because it's like,
Yeah.
hey, I don't have sales and marketing generating. I'm not making money to pay payroll because I don't have that process. And I really just want to iterate a little bit on what you're talking about, just structurally making those
Okay.
incremental changes, because it's so impactful. But the long-term strategy and having the right expectation, like that,
Yeah.
maybe give me a client of yours that said, hey, you know
Okay.
what, you maybe doing 2 million and you don't have 3 to 6 months, but we will start doing some incremental things. And then maybe it took them 9 months to get 3 to 6 months of cash flow or cash in the bank. I mean, just
Yeah.
having the right expectation for some of these business owners, because we're always thinking, hey, I want to do it now, I want to do it yesterday, whatever. And the thing is, just having that right expectation, understand,
Oh
hey,
yeah.
making those incremental changes now will impact down the future.
Oh, no, it's a long game, for sure, to make those changes. And when I am proposing the changes and we're creating those action plans, it's very small changes that I'm talking about making, because it's a month to month thing. So if I'm looking at a client that we want to get him to a certain level of, average sales transaction value, and he's not there, and he say has $200 or $300 to go to get to that level, I'm saying let's look at maybe increasing it by $50 this month. Let's look at like very small changes will get you there, but you need to pay attention to everything, and you need to actually do it, because that's the other biggest thing that I see in clients I've worked with and am probably no longer working with is people just won't do it. Like I'll create a plan, preach it to them, not preach, that's not a great word, but go over it with them every month, and it's the same thing every month, and they just don't do it because, like you said, they're focused on sales, marketing, advertising, and none of the other things, and that's just not going to work. So that's one of the biggest struggles.
Yeah. And because if you're in a situation where you are relying on your sales
Yeah.
today to pay next week or tomorrow expenses, that is a horrible game plan. And that's why
Yeah.
I wanted to have you on and kind of discuss, because it's also, I think, this mindset that, oh, that's okay. That's how everybody's business is, right? We got to
Yeah.
just scale. We got to keep investing, right? And there's a lot of misconceptions. And it's like, no, you want to have a healthy business. And what Sophie's talking about is building a healthy business. It does take time, but in order to scale from 1 million to 8 figures to 9 figures, it's like these are infrastructurally kind of what you need to do, which I appreciate. Now, kind of talking a little bit about the taxes. Now, I know. Obviously you're not a tax consultant or anything like that. You can't give legal advice, da da da. If you like to say that, that's cool. But I do want to just kind of, iterate. There's a lot of things that are changing in the tax
Hmm.
world, and obviously just kind of certain things that you've been able to help your clients kind of focus on that help kind of withstand the taxes.
Yeah, making sure that they're setting that at least 20% aside to pay for their taxes so that we don't get hit with a tax bill in April that they can't afford is a big one. Making sure that they're just even simply using, like, not use making personal expenses out of the business account. You'd think that's a simple one, but it surprisingly isn't. Um, and then honestly, I don't do a lot of tax work and stuff, but I network and have a colleague that I'm really close to, and I refer all of my tax work to her, and we work kind of as a team to keep my clients and her clients kind of on the right track tax wise. And we have monthly to quarterly tax planning and review meetings with her.
Well, let me ask you this as well, because this is what I always found very interesting, like in the construction business, or
Sure.
like some heavy level leverage debt. And so obviously within the last few years, the interest rates were low, which then allowed obviously a
Hmm.
massive amount of capital. And I know a lot of companies took a lot of that capital to reinvest back into their business. But I do
Yep.
think sometimes there is a equilibrium, and there's like a balance. And so just like the debt to income ratio, what does that look like? Maybe assets to actually, cash flow coming in, what does that look like? And just kind of giving maybe a better glimpse coming from the CFO side of things. Hey, yes, we could afford that, but maybe it's not the best opportunity, because you have to think 5, 7 years down the road. Is that a payment, or is that something that we can afford long term? Does that make sense?
Yeah, no, and that's exactly the conversation when a client's like, "Hey, I've got this opportunity for a great new low interest loan or whatever," then I'm looking at what's that going to mean in a few years. Or clients that I had one, and I'm not working with him anymore, but he would take on these crazy high interest rate loans where we're paying weekly, like several $1,000s weekly. And it would just kept going up and kept going up. And that gets you into such a big hole. Like if you can wait it out, if you can kind of weather, your cash struggles, for a little bit without taking on those loans and that additional capital, do it. Like, do not, like, I just, don't do it if you don't need to is what I say. I don't like debt, to be honest. So
What would you say? What's the equation, I guess, the blueprint that says, okay, out of how much cash flow, how much revenue, how much profit, gross revenue, top line, do we do with debt, or are you doing more like, hey, what's our net versus debt, or what does that look like, just so that our audience understands kind of what you're seeing?
so I don't have a ton of experience anymore with clients in debt, but what I look at more is what's the payment going to be and what's that going to look like in your monthly expenses. That's what I'm most important to me, to be honest, because they're clients that we're managing their cash flow issues. So I want to know, how much is it going to cost you every week or every month? And is it something that's temporary? Is it something you're doing, and then we're going to pay it off by the end of the year because you're going to have a huge sale, and it's, what the plan is. That's kind of my rule of thumb and how the conversations I have with my clients.
Okay, gotcha. Because see, I had a friend of mine, just to share with you a story, and he owned a carpet business in South Carolina. And within the last several years, he's invested heavily into the infrastructure, more vehicles,
Yeah.
a warehouse, stuff like that. And so obviously all of a sudden, as your cash flow increases, your expenses naturally go up as well.
Mm-hmm.
And one of the things that I was basically kind of just helping him understand, and I'm not big in that kind of industry, if you will, but I was just letting him know, hey, if your margins decrease and your operational revenue decrease again, are you able to withstand that? And that's kind of what I
Exactly.
was basically asking as well
Yeah.
with
Yeah.
you. Yeah, go ahead.
No, I was just going to say, yeah, if you want to know that you can afford that payment if you have a couple months with little income, it's just, for me, I always want to have a plan, and I want to know why you feel the need to take on, debt, and what you plan to do with it long term. So
Yeah, and see, me personally, from a business world, I come from more of an optimistic view. Like, oh, I'll just sell more stuff to pay this
yeah,
stuff off. And I know that is bad to some extent, and I need individuals like yourself that are in my world, and my purview, so that they can kind of keep me grounded, be a little bit more realistic, and there's, like you
sure.
said, be building those boundaries and those safety nets. It's okay to be
Yeah.
optimistic. Now, I would like to ask you, when you're working with some of these clients, because obviously business owners, they want to explore, they want to be risky, they want to whatever. Do you give them like a certain amount and say, hey, you know what, depending upon their business, you have $1 million, you can play with it, you can lose it, you
Yeah.
can do whatever, it's not going to hurt the business. And then what does that look like a little bit?
Yeah. So, I mean, we look at the end of the year, you have $1 million surplus. So then I kind of create these what if scenarios of, this is what it looks like if you invest in your team. This is what it looks like if we spend more money on, marketing, or if you want to you need to buy some equipment, and that sort of thing. So we'll play around with the numbers a little bit, and then again, create a plan of what to do with it. And then, of course, I mean, you started your business to earn a living, so you want to make money. We'll probably bonus some of that out as well to the owner. So
That's awesome. I love it.
yeah.
I've heard, like, even the profit side of things is where you have like a bonus, right? And
Mm-hmm.
obviously associated with the performance of your team, and obviously have a bonus kind of bucket, if you will, that obviously
Yeah.
helps facilitate that. And I've heard there's a lot of creative ways that you could do this, structurally. But the biggest thing is, my question is, when you're working with someone like yourself
Mm-hmm.
and a business owner, they don't know what they don't know. And
Right.
naturally, like you said, you come in, take ownership, and you're like, hey, this is my baby. I'm going to help you generate and create revenue more and whatever, and reach those goals. How can a CEO or a business owner optimize your time, your energy, asking the right questions, maybe just like you said, bouncing ideas off of you instead of just going out there and going rogue and doing
Yeah.
things. And you're like, oh gosh, I got to be now reactive. What are certain things that, like, just facilitate good communication and an optimized performance for you, for the business, for the owner?
I think I always bring it back to your why and why did you start your business? What are your goals? And if you come to our meetings with clear goals and you know where you want to take your business, it's so much easier for us to kind of focus your plan on getting you there. And I think another struggle a lot of business owners have is they might not have clear goals. And so that's always where I start, and remembering why you started your business, why you're doing what you're doing, what problem you're trying to solve, is always kind of how I start all of our meetings, and how I start really the relationship and setting, the financial targets and your plan and everything.
Could you give us an example of maybe like one of your clients? You don't have to share names, but like one of the
Sure.
clients that, like what were they were, what did you do? And then obviously the result that they've been able to, you know, produce because of your work.
Yeah. So I started working with a client. They were, I think, 2 years into business when I started working with them. They weren't really a CFO client yet, but and I wasn't offering CFO services yet either. But they would always come to me with, hey, can we afford to do this? What do you think about that? Hiring this person, can we give raises, et cetera? And that conversation turned into, then I started offering CFO services. They became a CFO client. Looking at their last year to this year, they're looking at doubling their revenue, simply because we created a plan for them to generate more leads, raise their prices was a big one. They offered a really premium product, and I feel like they weren't charging nearly enough for that. So that was another big one. And then they were outsourcing so much of their work, which can be a good thing, but I think they had the capacity to take on more work, and bringing more team members in-house was another big one. And so now they were doing, I think they did 300,000 of gross revenue last year, and they're on track to do over $1 million this year, just simply by making small changes and really focusing their energy and efforts on just a few key areas.
I love that, because the reason why I love to talk about this stuff is because, one, it's not sexy, and it's the
Yeah.
unsexy work that really produce a foundational business.
Yeah.
And I think it's really cool because, again, my brain does not work this way, and I
Yeah.
see the value that you have. And again, most of them, we would love to be hustling, we would love to be marketing, sales, we got to, all this, and there's tons of content on the front end about marketing, sales, and why that's important. But obviously this back end, it's like, okay, once we do that cash flow, really optimize that. Now, when you work with that client, they were obviously teachable, right? They wanted to be
Yes.
taught and so forth, and they actually implemented what you actually said as well.
Yeah,
That's
that's a
helpful.
big one. That's key.
Yeah.
Yeah.
Well, I was just going to say, so what are certain characteristics when someone is reaching out to you, or maybe some of our audience is like, hey, I like what Sophie's talking about, I need help with that. What characteristics should they have when they're coming in to this conversation and saying, okay, you know what, I may not know everything that I know, and you're the expert in this?
Yeah, knowing where you want your business to go, and being ready to make some changes, being a student, because I like to say I approach my clients with the heart of a teacher, and so my clients are kind of my students in a way, and just being open to learning and growing and doing, making some changes. Some people are not huge fans of change, so I think that's really important. If you want to, obviously you're coming to me because you want to grow your business, or there's some issues in your business that you need to fix. And so just remembering you came to me for a reason is a good one.
Yeah, and that's what it really comes down to. This is awesome. Sophie, how can our audience reach out to you? Because I just appreciate the immense amount of knowledge and wisdom that you said today, and I just appreciate just the in-depthness of this. I do have a few other questions though. One is, when you're hiring someone, depending upon their how much you're paying them, how much
Hmm.
revenue should they have in to compensate? I've heard 250,000 for each employee. I've heard it depends upon obviously how much you're paying that individual. You should obviously have X amount of revenue to compensate for that? What is your kind of goalpost, if you will?
I mean, I kind of look at overall budget, and most of my clients that are bringing someone on, it's someone that's going to generate even more revenue for them. So I kind of look at what they're going to bring to the table rather than what you already have, kind of, if that makes sense. For me, I don't have necessarily a number in revenue that I'm looking at in terms of measuring up their salary, to be honest.
So walk me through that process a little bit. When you say
Sure.
generate revenue, because obviously like the sales team, when they're producing, hey, that's generating revenue. But maybe a
Mhm.
copywriter, maybe that's not producing generate, or maybe like a CS manager, it may not be producing revenue, but it is needed for the business. So maybe if you could just walk
Yeah.
us
So
through
it
that thought process.
it might not, but with the client that I just mentioned, so they were a very small team, and they've added team members very slowly over time, and each time it's freeing up usually the owner from something that he's doing to then go and do more sales and generate more revenue. So it creates the capacity for their business to do more of what they're doing just by bringing on one or two additional support people, if that makes sense. So it might not be what that one person is going to bring in, but what it allows the rest of the team to do.
I see what you're saying. Okay,
Yeah.
gotcha.
Does
And
that make
that's actually,
sense?
yeah, it does. It does. And it's actually very interesting because it's a different perspective, because like you said, that you don't like hold real like gung ho about, hey, it's got to be 250 for each employee,
No.
250 G's for each employee, because then it's a stagnation a little bit. It's more of just putting it into context a little bit, is what you're saying. Put it into
Yeah, well,
context and
and
say,
it
go ahead.
depends too what are the financial targets that we set. What if you hire that person and it adds to your payroll expense, what does that do to the rest of your numbers? And what do you need to do to stay on track? So it truly depends on kind of the goals that you're trying to accomplish at the end of the day.
Mhm. That makes perfect sense. Okay, gotcha. Because there are certain like you said, it's dependent upon obviously where they're at in the business structure as well. Because
Yeah,
maybe, hey, you know what, you're getting a lot of clients. Maybe you need a success manager to keep client retention, because all of a
right.
sudden churn rate decreases. Well, now all of a sudden that becomes profitability for the business,
Yes.
right? So
Hmm.
I get where you're coming from. It is just dependent upon where that is.
Hmm.
Interesting. Love that. Love that. Is there anything else that you'd like to add that maybe I didn't ask, or any other questions or anything like that, or any other tips that I think our audience could leverage?
No, I mean, I think the biggest thing to take away is you have to have a plan for your business. I mean, going out and focusing on sales and marketing and all this is great, but you have to have a plan and know what you're going to do with that money, that income, and know how you're going to grow. And I think having an accountability partner is super important in that, which is something, that's obviously what I do or someone else. Having a forward thinker on your finance team, I feel like is very important.
That's awesome. That's awesome. Sophie, how can our audience reach out to you, be part of what you got going in your community?
Yeah, so my website, sjpservicesgroup.com. It's currently under reconstruction and rebranding, so it's going to look a lot better in a few weeks, hopefully. And then sjpservicesgroup.com/right-fit will allow you to schedule a call. And I'm also on Instagram, SJP Services Group.
Awesome. And guys, those links will be in the description below. And again, I just can't, foot stomp this enough. The reason why you're not able to scale to that 8-figure business or that next level, whatever that may be, is because you have not put that foundation in. You bring it feels like, if it feels like you're on a treadmill, you're handcuffed to it and it's going full throttle, and you're like, oh crap, if I misstep one thing, this whole thing just explodes. You do not want to be in that situation, definitely going into a recession. So that's why I wanted to have Sophie on here today. And guys, those links will be in the description below. Make sure you reach out to her, and just schedule a phone call and just get some insight from what she's got going on, and be part of just her knowledge base. Sophie, is there any last words of wisdom that you would like to share with our audience?
Um, know your numbers and have a plan. And I think that's a great place to start.
Awesome, guys. That is my friend Sophie Plappert. That is Journey with Christian Evans podcast. Until next time, be uncommon if you can.
Yo, this is Christian D. Evans, Journey with Christian D. Evans podcast. We thank you so much for listening to this amazing episode. If you feel and you know that this was valuable to you, please show some love to our amazing guest by liking this, by commenting on this, by making sure that you do a nice 5-star review and just show some love to our guest. That'd be really awesome. Also, make sure you share this with a friend, a family, a colleague, someone that you believe would bring value to their life right now. And guys, we just want to say thank you again for just being part of our community. If you want to have more resources, don't be afraid. Go to christiandevans.com. You can actually schedule a phone call with me, or you can send me an email at christian.evans@beUncommonIfYouCan.com. That's christian.evans@beUncommonIfYouCan.com. Always love to hear some feedback and let me know what is the number 1 or 2 things that you are struggling in your business and your life, and we'll make sure we have those conversations. Guys, that is Journey with Christian D. Evans podcast, and until next time, remember, be uncommon if you can. Cheers.